need the glasses to read.
I know.
Perfect. Maybe 1 minute.
A small.
Things going on.
Yeah.
Graduation.
Yeah.
Prom. And
Yeah. Kids getting out of school soon and have stuff at school.
And then Kelsey and Kimberly have.
Kimberly said, I never heard anything from Kelsey. I don't know.
Okay. I thought she was going here.
I thought so too. But.
So I will.
We can give it a couple minutes, maybe.
Yeah, I will do intro to transition living
Yes.
network.
Okay.
And then have three of us,
Okay.
do
Brief introduction.
one
Yeah.
to two
Yeah.
sentences.
Yeah.
And then I'll introduce Thomas.
Okay.
He's this
Let him
next
talk a little bit.
sponsor.
Mm-hmm.
And then Thomas will talk. And then after that, let me introduce today's
Okay.
speaker.
Okay.
And then go into
Okay.
this one.
Okay.
And then after read this one, then
Mm-hmm. Okay.
pick it up.
Sounds good. Yep.
Okay. We can
Sounds
wait
good.
for a couple minutes.
Oh, yeah, another minute or two.
Such a nice weather. Such a nice weather. Didn't do as good of a job promoting it because I was in Peru
Yeah.
and then came back and I got all of a sudden super busy.
Yeah, that always happens.
I didn't really have time to go
Yeah.
through pictures.
Oh, yeah.
I was just
I know Cara reposted, and I sent it out a couple
I
times.
did
and-
yesterday.
Yeah.
I was like, gosh.
And I think Kimberly did too, so yeah.
Yeah, I saw that.
Yeah.
I saw them every time
Yeah.
the transition living
Yeah.
network is linked.
Yeah. Oh, my eye just wants to water.
Yeah, we're good to go.
One more minute.
Yeah.
Almost done?
Yeah.
Okay. Stop. Welcome.
I was looking for organizing.
That was another month. This month is the, so we have a different topic every month.
Okay. I messed up last month.
Hey, welcome. It's a small group today, but I'd like to first introduce Transition Living Network. Transition Living Network is 5 of the professionals that work in the senior space. And we started a year and a half ago by partnering with Anything Library to present a monthly speaker series, Aging Wisely. It is always second Wednesday of the month from 10 a.m. to 11 a.m. in this room. So please take this flyer over there. It has all the speaker lineup for the rest of the year listed here. And then you can plan accordingly to attend the topic of your interest, or if you could spread the word about Aging Wisely speaker series, we greatly appreciate it. Transition Living Network is 5 of us, and the 2 of them are not here today. Kimberly Diaz, she is a care navigator to help you identify and then find the right solution for senior care, including in-home care or living communities, assisted living communities. And Kelsey McClay, she's not here, but she is a Medicare specialist. So she will be speaking in September, Medicare 101, and then it's a complex area to navigate through with all different changes. So please do not miss that one. And Cara is a real estate broker, and you want to introduce yourself?
Sure, great. Well, thank you all for coming out today. This is a really important topic, and I'm Cara Riley, and I'm a care navigator in real estate and consultant. Hey, Marilyn. So I help people decide and analyze whether they should stay or go, and our treat guide today is going to tell us how we can stay. So you do have choices, and that's what we try and do. And on the back of this flyer, Renatta, who's our speaker, has done an example of how you can move into a ranch-style home and have no payments. So you're going to enjoy the talk today.
Oh, yeah, so Renatta Anderson, I'm going to be speaking today. I'm a reverse mortgage, retirement mortgage specialist with Fairway, and I'm also a certified senior advisor. So look forward to sharing with you today.
And I'm Sherry Cree with Ascendant Real Estate. I serve real estate needs for seniors and caregiving families, and then that's my passion. Next, I would like to introduce Thomas Schumacher. He is a snack and coffee sponsor. Please grab some, this moment and introduce yourself.
Hello everybody, I'm Thomas. I'm with Livable Mobility. We specialize in keeping people in their homes through home safety. A lot of what we do, we work with people who are having mobility issues, and we address them in several different ways. The main 3 areas that we concentrate on are getting into the home, navigating up and down the stairs within the home, and also the bathroom. Those are the 3 most dangerous areas. So we do a lot of stair lifts, a lot of wheelchair lifts, a lot of full bathroom remodels. We also do full home elevators, just all sorts of safety from top to bottom. So got some flyers, I got some my business cards back there. If anybody needs any help, let us know.
You can also modify the home that people are buying.
Exactly, exactly. A lot of people are doing multi-generational home living right now, and they'll contact us prior to buying something to find out what it would take to make the basement accessible, or make it upstairs more accessible for mom or dad, if that's the situation they're in. So we do a lot of that. So, all right,
Thank you. Thank you for snacks.
Yes, thank you.
So as a transition living network, our goal is to bring resources and service providers to consumer in the senior and caregiving space, and also creating a community. There are some of us coming to this speaker series monthly, and if you look at the schedule, at the end of the year, December is holiday social, and we do something fun. So our goal is to create a safe community where consumer can connect with the service providers. Now, I would like to introduce today's speaker, Renatta Anderson. She is a Colorado native, grew up in Arvada, and went to school in the North Denver area. She spent 12 years in the banking industry, working her way up from a part-time teller to a bank manager. She left the banking world and entered the mortgage industry in 2000 as a loan officer. She later spent a few years working in the advertising marketing arena within the real estate world. Her time in advertising confirmed that her true passion was helping clients obtain mortgage financing. Having experience in reverse mortgages within her own family, and seeing the positive impact it has had for many of her clients, she made the decision to focus exclusively on retirement mortgage. Her true mission is to get the word out about reverse mortgages and clarify many of the myths and misconceptions people have regarding it. It is truly an important tool to be utilized in retirement planning. She has earned her certified senior advisor designation and holds several other positions within organizations that specifically serve seniors. Renatta and her husband, Tony, have been married for over 39 years. That is good. And reside in Broomfield, where they raised 3 boys. They now enjoy watching their 4 granddaughters whenever they can. They enjoy sports and traveling, especially throughout Colorado. Please welcome Renatta Anderson.
Great. Thank you, Sherry. Thanks. So as Sherry said, I'm a Colorado native. I've been in the business for a number of years, and about 8 years ago decided to focus on reverse mortgages because I think it's important to understand it and understand the seniors that I'm working with. And so this is all I do, is the reverse mortgages. So we're going to talk about reverse mortgages, and I'm not here today to talk you into a reverse mortgage. I'm here to give you information so that maybe you'll sit and think, that's not what I thought it is. Maybe I should look at it a little closer. Because as Sherry read, there's a lot of myths and misconceptions about reverse mortgages. So we're going to cover some of those today. We'll go through an introduction, what it is, and then we're going to talk about one of the specific ways to utilize a reverse mortgage is to buy a home with reverse mortgage. And that's a newer part of the program. And I'll share my mom's journey. She had 2 reverse mortgages. So the house I grew up in Arvada was a big horse property, needed some deferred maintenance. She took out a reverse mortgage in late 1989. We think she was one of the first people in the state of Colorado to do a reverse mortgage, actually. She thought she was going to stay there for a while. And then in 1993, the real estate market was pretty hot for anybody that was around. We sold our home and moved to Broomfield. And so she said, let's put it up for sale, see what happens. She put it up for sale, sold it, paid off what she had borrowed on the reverse mortgage, took her cash, and went and bought a home in Gayton Green in Broomfield. At the time, you couldn't buy with a reverse mortgage. As I mentioned, that was a newer part. I think that came in 2015. So she paid cash. She now owned her home free and clear. And we took out a reverse mortgage almost immediately for her. Because she had all that equity, we were able to use some of that equity, pull it back out. She got a monthly payment every month to help supplement her other income. And she had a line of credit that she used at one point to buy a new car, get a new furnace, air conditioner. She lived in the house for 28 years. Came a point where we had to move her to assisted living. And she still had equity. So even after 28 years, we hired a realtor, sold the home, paid off her reverse mortgage, and she still had equity that she walked away with. So this is something I believe in. My own mother had it. But again, I like to get a judge here because there's so many myths and misconceptions. I'll say, what do you hear about reverse mortgages? Some people say, oh, those are great. Some people say, oh, I don't know. I've heard those are. So I'd like to open it up. What are some of the things you've heard about reverse mortgages that maybe have caused you to think, oh, I don't know? Anybody?
I haven't heard anything from
Okay.
someone that's been through that. So
Okay,
that's
good.
why I wanted to attend to that.
Good.
Yeah, I've been to another reverse mortgage workshop, and I think they're great, but the things that I hear from people are, why should I pay for interest on my money? Yeah.
Yeah.
And they're just always afraid you're gonna come take their house.
Right. Yeah. Anybody else have anything that they've heard that they like? Because sometimes we'll say, oh, I heard those are bad. Well, what did you hear? I don't know. I just heard they were bad. And some people say, well, Aunt Sally had one, and it was a mess when she passed away. Well, when I dig deeper, what was a mess is nobody realized she had a reverse mortgage, and the kids thought they were getting a free and clear house, so they weren't real happy. So it's important to keep your family involved in the process too. But before we get into the basics of a reverse mortgage, I like to shift the thinking a little bit, as you were saying, because some people say, well, I want to leave the house to the kids. Well, the kids don't want the house. And really, do you want to leave them the house, or do you want to leave them something when it comes down to it, right? Because most of the time when you pass, they're going to call Cara or Sherry and sell the house, right? They're going to clean it out and sell the house. So, but I like to shift our thinking a little bit because it is a little bit different. So let's go through some of this. So this here is very similar to what I see for a normal client of mine. That over there represents their savings. It might be an IRA, investments, whatever it might look like. Has about $400,000 in there. And they own a house, which is worth about $600,000. Typically what we find, about 40-some% of people have a mortgage still. So these people have about $100,000 mortgage. So what would their equity be in their house? If the house is worth $600,000 and they have a mortgage of $100,000, what's their equity? $500,000. So just a basic balance sheet here. If we look at this, they have $400,000 in savings and $500,000 in equity. What's their net worth? $900,000, right? So then if we take a look, and again, it's a shift of thinking. We've saved that bucket over there, right, for retirement. So we think that's where we should go if we need money. But if we need, let's say we need $50,000. We need to improve our home to stay there. We're going to take a nice vacation to the Mediterranean, whatever that might look like. And we need to take $50,000 out. Our first thought is to go over there, right? And so we take $50,000 out. If we take $50,000 out, what's our net worth now?
Yeah.
So $350,000 and $500,000, what's our net worth?
$850.
Okay. So, but if we find a way to tap this in a safe way versus that bucket only, and that is through the reverse mortgage. When you pull money out of here, first of all, it's not taxable. Whereas over there, that can be a taxable event if it's 401ks or IRAs that you're pulling money out of. The other thing, what we've seen most recently, is the down market. So if you go to a financial advisor and say, gee, I need to take $50,000 out, and we had one of those bad days, it's very hard to recoup those losses that you just pulled out. So what the reverse mortgage does is give you another bucket. So what if, instead of taking it out over there, we take it out over here? So what's our equity? $450,000. What's our net worth? $850,000 still. So again, it's that shift of thinking. You know, we think, oh, I'm spending my equity. Well, it's either spend equity or sometimes spending your other assets. Which is it?
And it's not taxed.
Right. It's not taxable. It's not income.
Right.
So it can help with other tax situations too. So I like to go through that exercise just to kind of, again, make that shift. So why are people looking at reverse mortgages? Probably now more than ever, actually, one is the market volatility. Inflation, we've all experienced that. I went to the store the other day and bought like a few things, and it was like $65. I was like, what happened? The biggest fear of seniors is outliving their savings. It's not dying, actually. It's outliving your money when it comes down to it. Making a mortgage payment in retirement. So that's one of the things that we can do is if you have a mortgage on your current home, we can potentially pay that off and stay where you're at. Or again, make a move without a mortgage payment. And not being able to live in their home in a safe, sustainable way. So people with stairs, we have stairs. So we're looking at, my husband just turned 62, probably making a move and using the reverse for purchase. So what is a reverse mortgage? So a reverse mortgage is a loan program exclusively for older adults. What we're going to be talking about today is the FHA reverse mortgage. So typically when you hear reverse mortgage, it is the FHA version. The FHA version's been around since late 1988. It was actually started by Ronald Reagan. But they've made changes over the years, and I'm going to cover some of that. When you hear some of those things about reverse mortgages, some of them have never been true, but some of them they've made changes. They literally look at the program every year and look at it. There are some programs out there that are not FHA. Those have typically come on board because of there is a value limit of 1.2 million on the FHA reverse mortgage. So it's for homes of 1.4 million and over. There's some programs that have popped up. So what it does is it allows a way to convert a percentage, not all of it. I met with a client yesterday. She's like, So you're going to give me all of this? It's like, no, you don't want it. Believe me, you don't want all of it. It's a percentage of your equity that you have, and how it's calculated can vary on a couple things, and we'll cover that. There's no required monthly payments. You have to pay your property taxes, homeowners insurance, and HOA dues. The only thing that can ever cause a problem with a reverse mortgage is if you don't pay your property taxes, homeowners insurance, or HOA, or if you're no longer living in the home permanently as your primary residence. And that can mean you can travel, you can have a second home. It just means that that's your primary residence. Again, you have to continue paying. So as I mentioned, the home equity conversion mortgage, that's the fancy name for the FHA reverse mortgage. It's called a HECM. We love our anagrams, and it was launched in 1989. It's the most used. Again, when you hear reverse mortgage, I can guarantee 90-some% of those out there are the FHA version. At least one of the borrowers has to be 62. So my husband turned 62 a few months ago. I'm way behind him. But we can still do a reverse mortgage, and I'm protected. Even though I'm not on the loan technically because I'm not 62 yet, I'm still protected. And that was some of the bad press that reverse mortgages got a few years back. So some of the pros and cons. So some of the pros is it can be a source of cash flow. It allows you to tap that equity. Again, the lady I met yesterday, she has this gorgeous home up in Pine, Colorado that's sitting there doing her no good. It's totally illiquid. So it's a way for her to tap that equity and cover. She has horses and horse property in order for her to produce some cash flow. There's no monthly mortgage payments. And it's a non-recourse loan. This is one of the most important things of the reverse mortgage. What that means, at the end of the loan, you nor your heirs are ever left with a big bill. So as I like to explain it, a traditional mortgage, you borrow money, you're required to make payments, and your balance goes down over time, right? With a reverse mortgage, you borrow money, and you're not required to make payments, so the interest will accrue, so your balance will go up over time. But your home value goes up over time. So as I mentioned, my mom, 28 years later, she still had equity. Now, if we would have had to sell the home in a 2008-9 real estate market and values had went way down, could she have owed more than the home is worth? Possibly. But FHA covers that in all instances. So they can't come after other assets, they can't come after your heirs for that. So if now your home is worth $500,000 and you owe $550,000, FHA covers that. So again, there can't be a big bill left for the heirs. And we can show what your balance will look like pretty accurately over the next 5, 10, 15, 25 years. But it is a non-recourse loan. It's the only one I know. Only thing responsible to pay the loan back is the house, not your other assets, not the heirs. Some of the cons is a minimum age requirement. I've done presentations and people say, oh, I'm not 62 yet. I sure wish I was 62. I wish I could do this. So there is the minimum age of 62. You are spending your equity. So, you know, as my mom, she did not have the same amount of equity as she would have if she didn't do a reverse mortgage, yes. But she spent some of her equity. She was able to live there comfortably for 28 years and not worry about money. And to me, that was huge. That was a very important part. The other thing is it has to be your primary residence, as I mentioned. That just means this is where your driver's license is, this is where you file your taxes. You can have a second home, you can go on vacations. One of my neighbors behind me a number of years ago owned their home here in Broomfield free and clear. They took out a reverse mortgage, took that money out, and went and bought a condo in Arizona. They now have 2 properties with no mortgage payment, and they go down there and snowbird every year still. So they're thinking about moving down there permanently now, but yeah, so you can have a second home, you can travel, whatever that might look like. So some of the myths and misconceptions, so this is one of the biggest ones, is the bank will own my home. I no longer own my home, it's going to the bank. That's not true. We just file a deed of trust, a mortgage, just like any traditional mortgage. You own the home, we just file a deed of trust with the county. So that's never been true. You must own your home free and clear to do a reverse mortgage. Again, that's not true. There are some people that there's enough that we pay off their existing mortgage to eliminate a mortgage payment. And right now we're primarily talking about people who own their home currently and are looking at staying in their home. We're going to talk about the reverse for purchase here towards the end. Again, I think I covered the heirs are stuck with a big bill. That's not true. There might not be a lot of equity left. There might not be any equity left. But again, if you've lived there for 25, 30 years and there's no equity, is that the end of the world? What we find in working with financial advisors, and that's been one of the biggest shifts with reverse mortgages over the years, because reverse mortgage used to be considered a loan of last resort. And certainly I'm very blessed to be able to help some people who they're in desperate need. If they don't do a reverse mortgage, they're going to lose their house, or they're not going to be able to stay where they're at. But most of the clients that I work with don't need a reverse mortgage. It just makes their retirement and their life better and gives them more options. And it's people actually in the financial planning academic world that has been doing the studies and running all these scenarios over the years, that they're starting now over the last, most recently 2 or 3 years, to really look at equity as part of an overall retirement plan. So again, because it's tax-free, it gives people another bucket. It can, and what we find is, remember that first bucket I showed you of investments? Sometimes if you spend equity, that's one thing, but sometimes that can help preserve that other bucket longer, so that maybe you're leaving cash to your heirs as opposed to a free and clear house. So again, it just kind of rearranges things within your balance sheet. It doesn't change things. So how do you qualify? So again, at least one, here in Colorado, Texas is the only one, only one borrower has to be 62. You must be a homeowner. You must have significant equity. It has to be your primary residence, as we mentioned. And there are some minimum credit and income requirements. And again, that was one of the changes that was actually put into place back in 2018, 19, is you used to not have to qualify for a reverse mortgage. Like when my mom did hers, if you had equity, you got a reverse mortgage. But now there are some basic requirements. Because if you remember, what was the one thing that can cause a problem? Not paying your taxes and homeowners insurance and HOA. So we do a basic assessment to make sure that you can afford to stay there long term. If we're doing a reverse mortgage for someone who really can't afford to pay their taxes going forward, then we're just putting them in a no better situation. Yes?
So tax means like property tax?
Property taxes, yes.
Oh, okay.
Yeah, the county property taxes, yeah. So there are some, and again, that was a change that was done. So it's not near as stringent as a traditional loan, but we do, did I skip one? But we do go through that process. There we go. So the type of properties that are eligible, obviously a single family home, a 2 to 4 unit home, so like a duplex or a fourplex, as long as the borrower occupies one side. I know I have a realtor that every time I talk about it, he's like, why aren't people building more duplexes? A senior could buy with a reverse mortgage and rent out the other side and have income for the rest of their life. But a 2-property townhomes. Condos, we have to be a little more careful because the project has to be FHA HUD approved. And sometimes we can get that done if it's not, but it does have to go through that process. Manufactured homes are fine as long as they're permanently affixed to the property and you own the property. It can't be like in a mobile home park or anything. How much money you can get varies. So it's based on the age of the youngest borrower and current interest rates. So it's literally a chart from FHA that says if this is the age of the youngest borrower or spouse and this is the interest rate, this is the percentage we'll loan. So the older you are, the more money you have access to.
And so it's your situation, because you're younger than your husband, they say the younger
Spouse or borrower, so it would be based on my age.
So you have to be 62.
So, well, no, it's just that the calculation is based on my age because I have protections. So it's based on how fast the loan could grow is what they basically base it on. So you get a lot more at 82. Yeah, at 82 than you do at 62.
Right, yeah.
So, yeah, and we'll cover that, in the purchase here,
Youngest borrower.
Right. So how can you take it? So I just mentioned that calculation. So, excuse me, for every reverse mortgage, we go through that calculation and we say, okay, your age is this, we think the home value is this is how much we'll loan. And so how you take that can vary. So one of the ways, and again, once we get through this, I'll cover a little bit more about the purchase, is you can take it at a lump sum, which is what a purchase would be. So you're buying a $600,000 home based on your age, we're gonna loan you $200,000. That means you come in with the other $400,000. You now own a home for $600,000, and you can live there without any mortgage payments. We do that lump sum at closing. So we come up and say, we'll loan you $200,000 we're going to disperse all of that at closing. The other way, depending on, again, if you're staying in your home or what the situation would be, you can take monthly advances. Remember, I mentioned my mom. She got a monthly advance for the rest of her life. It's called annualized. So she could have lived there for another 20 years and she still would have got that monthly payment no matter what happened to the value or the equity position in her home. Or you can take out a fixed monthly amount. So I just had a borrower who is retiring at 62. He needs to pay for his health insurance till he turns 65. So we're doing a monthly payment of, I think it worked out to like a little over $600 a month for the next few years, just so he has the money to pay his health insurance in his early retirement. So we can do it for just a period of time too. You can also set up a line of credit. So again, someone who is in their home and they have a lot of equity on their home free and clear, they don't need the money today, but we can set it up in a line of credit that they can access. And the cool thing about this line of credit versus a HELOC, you can go to the bank or the credit union and get, they call it a home equity line of credit, a HELOC, is this is guaranteed to be there and it's guaranteed to grow over time. So in that number I just set out, so the home's worth $600,000, we give you access to $200,000 based on your age today, but you don't need it. It's gonna grow based on interest rates. So down the road when you need it in your 70s to modify your home or whatever that might look like, you may now have access to $300,000-400,000. And it's totally independent of what the value of the homes are doing. And it's guaranteed to be there. The reason I bring that up is the HELOCs are not guaranteed. And people don't realize that. It's a one-way contract with the bank. And there have been times, so I mentioned 2008-9 when the real estate market, banks sent letters out to their clients saying, oh, we think the value of your home went down. Your line of credit's now frozen. You no longer have access to it. And they had every right to do it, and they did do it. Some of the bigger banks did. And by the way, that interest-only payment, you have to now start paying principal and interest. It happened in 2008-9. Guess another time that it might have happened. I think a couple years back. A couple years back. March of 2020. COVID hit. And there were banks, it was for a short period of time, but there were banks that froze lines of credit. I mean, everybody thought the world was ending, right? So they had every right to do it. So that can't happen with this, as long as you're living in the home, paying your taxes and insurance. You can also do a combination of all three. So I had a lady who her husband had passed away about a little less than a year when I met her. And she was okay financially. She would have survived. She was not in a need to do this, but they had a small mortgage, but it was a 15-year amortization, so it was a pretty big payment. So we came with that number based on what her home value was. We paid off her existing mortgage, so we were able to eliminate that mortgage payment. Plus now she's getting $1,000 a month from the reverse mortgage, so that was a huge cash flow turnaround for her. And she has a line of credit that with the money left over after we have that calculation, that she can do what she wants with it. 3 months after we closed, she was going on a Hawaiian island cruise for 2 weeks. So she's a traveler. And she was utilizing some of the money from the reverse mortgage to do that. So it gave her more options. We talked about the financial planning side of this. So again, financial planners have really started to really look at this. To be honest, 7-8 years ago when I'd go talk to a financial planner, they'd be like, my clients have money, they don't need this. Again, because it's that old thinking of it's a needs-based product. But what they're finding is because it's tax-free and it's not income, it can have some real benefits to utilizing this bucket of money. It can help keep your adjusted gross income low. So without getting too deep into the financial planning thing, if your income hits a certain level, your Medicare payments go up for actually 2 years. So I had a client who had sold a home and she had a huge capital gain. Her Medicare premium went up substantially and she's stuck for 2 years. So depending on, if you're having to pull money out of an investment or something to that effect, this other bucket can help, again, working with a financial advisor to keep that adjusted gross income down. Again, it can make your retirement funds last longer. It can hedge against market risk. So again, especially what we've seen these last few weeks, month or so with the market, pulling money out when the Dow's down or your investments are down can be very hard in retirement because you don't have time for the people in their 30s, 40s, they have time to recoup those losses. People in retirement don't. And you can also insure against longevity or pay for long-term care. So again, I have a financial advisor who talks to almost all their clients about setting this up to pay for long-term care, because long-term care policies are very expensive, especially as you start getting a little older. So having this equity set up that you can tap when you need it and spend as you want. Long-term policy, you can't. You have to spend it the way they want to spend it. Again, I kind of talked about all these. These are some of the protections that went into place. There are limits on how much you can access depending on how the loan is structured. The non-borrowing spouse, it used to be like in the case with us, if we did a reverse mortgage and my husband died, I was out of luck. I'd be out of luck as a younger spouse. Now I could stay there as long as I want. We talked about the line of credit. So one of the big things that is, can you use a reverse mortgage to buy a home? And I talked about that a little bit. And again, that was something that came into, I think it was 15 or 16. But you can actually buy a home with reverse mortgage. And it's funny how many people don't understand this. And unfortunately, a lot of realtors. I had a client that wrote an offer on a listing, and I called the listing agent, and they're like, well, I don't know what you're talking about. You can't buy a home with a reverse mortgage. It's like, well, yes, you can. You just don't understand it. So it's a way to upsize or downsize, move closer to grandchildren. Sherry was asking me about, I'm blessed that all my grandchildren are here, but so many people I know, their grandchildren aren't where they are. People who, their kids are in, Colorado and they're coming from Missouri. It's quite a sticker shock to come here, right, to buy a house. So it gives a way to move closer to their kids. We'll show some numbers here, but you can put as little as 45 to 65% down. So remember that calculation I was saying. So if you're buying a $600,000 home, and one calculation might say then we'll loan $200,000, you come in with the other $400,000, you now own a home with no mortgage payments. And we'll show a couple other examples because I think that's the best way to illustrate it. You won't have to spend other assets. So I had a gentleman who was actually up at Heritage Talk Creek a number of years ago. He had moved from out of state, bought up there, and he was talking to me about doing a reverse mortgage after he bought. He's like, why did somebody not tell me about this reverse for purchase? I ended up pulling money out of my IRA, taxable money, to put down on this house because I didn't want a monthly payment. And he wouldn't have had to do that if somebody would have told him to do it. So it keeps your other assets in place. Again, no mortgage payments, must pay taxes and insurance. So we'll go through a couple of examples here, and then we'll go through Cara's example too on one of her listings. So this is an example here. Cindy, who is 70, is selling her current home that is owned free and clear. She wants to move closer to her grandchildren, but would like to downsize. But she also wants to leave some money for her grandchildren. So she wants to set up an annuity. And I'm finding more people, as a side note here, doing the reverse mortgage to help and give money to their family now while they're alive. I had a client who did a reverse mortgage to pay for her granddaughter's college education. Another lady who her daughter was going through a divorce, so she did the reverse mortgage to give her daughter money for a down payment on a new house. She said, I might as well give it to her while I'm alive. Why does she need to wait till I'm dead? So that's a big trend I'm seeing right now too. So she wanted to sell her home, downsize, and then have money left over to help her grandchildren. So in this example, so she's going to sell her $400,000 home. She can go and buy a $375,000 home, which, well, she could have paid cash, right? She had enough money to pay cash, but there wouldn't have been much left for what she wanted to do. But in this scenario, she's going to buy a $375,000 home. She only needs to put down just short of $225,000. She now will own her home. The bank comes in with the rest, no mortgage payments, and she has money left. She has the $175,000 left to put into an annuity for her grandchildren, or for whatever you want to do.
You have to decide when you get
No.
reverse loan?
No. However you use the money, either with the reverse mortgage or from, in this case, the sale of her home, is completely up to you. So she could change her mind and decide to go on a big trip. But that's a way, because again, she could have bought cash, but this gives her home, no mortgage payment, and leaves her in a better financial situation. She has the $175,000 left over. This is James and Mary. They're 64. They want to move to a newly constructed retirement home. They want to move to probably a 55-plus community. They're finding that the home they want to move into is more than what they currently are going to net from the sale of their home. So this is another big scenario that I see people, they're only going to net a little over 370. And so in their mind, to not have a mortgage payment, they would have to stay to a $370,000 home or take out a traditional mortgage and have mortgage payments, right? But with the reverse for purchase, they now have the buying power of a $600,000 home. So they can come in, put their $374,000, almost 374 down, buy the $600,000 home in the 55 plus community and not have a mortgage payment and be where they really want to be. So I find scenarios kind of help people look at this differently. Also, Cara has flyers up there. She has this beautiful listing up off of 126th and Madison Way here in Thornton. And she's going to have an open house in a couple weeks, I think. But on the back, I put together some scenarios. And so again, this can tell you. So the house is going to be listed for just under $550,000. So on here, you can see at 62, you'd only need to come in with about $380,000. 65, $365,000, 70, $350,000. Age 75, $330,000. So you can look at those and see. So someone who is going to net 300 and some thousand on their sale of their home, which is a pretty common number that I see based on people's equity levels and what values of homes have done, they have more buying power than they think, and that's really what it amounts to. So again, this is. This isn't a 55 plus community though. It's just kind of a.
There's no limitation.
Yeah.
But the cool thing is the developer knew that there needed to be no stairs. So even coming in from the garage, it's just an incline.
Yeah.
There's no stairs anywhere, and it was built with doorways to accommodate wheelchairs.
Okay.
And
that's nice.
You can rent the whole clubhouse. I think you just put a deposit of $250 and have a whole giant party.
Wow.
Big kitchen. I just took pictures of it.
Oh, neat.
So.
Yeah. So, and there's a lot of those little communities around. I know, there are 55 plus, like Heritage Tog Creek or some of those, but there's other little pockets out there, and that's why working with an experienced real estate agent to find some of these areas that have, there's a word for it, and I can't think of something with 55, but yeah, that are ranches that a lot of 55 plus people live in, even though they're not 55 plus communities.
I asked the owners, I said, how many kids do you see? And they said none.
Yeah, yeah.
So even though it's not a 55
right.
plus, they don't see any little kids there.
Yeah. So that gives you an idea of how the reverse for purchase works. I like to cover here, and then we can leave some time for questions, I think. But when does a reverse mortgage become due and payable? When does it end? First of all, there is a maturity on the deed of trust. It's when you turn 150 years old. Because the state of Colorado requires there to be a maturity date on the deed of trust that's filed. So it's when you turn 150 years old. Excuse me. But there are other times, so you can sell the home. You sell the home, you have to pay off the mortgage, just like a traditional mortgage. And that's your choice. So again, that's one of the other myths. Well, if I do this, I'm stuck there forever. You're not. I mean, usually when I talk to clients, it's somewhere, if you're going to do a reverse on the home you're in or make a move, it's somewhere where you're going to want to be for the next couple of years. It's not a short-term solution. If you transfer title to someone else, so if you do a reverse mortgage and all of a sudden you're like, oh, I'm going to transfer this over to my kids, that causes a problem. The loan will come due. And that's true with any mortgage. If you all of a sudden are no longer the owner and you transfer title, that causes a problem. And just an FYI, I'm not an estate attorney, but never just transfer ownership to your children. It causes a lot of, without consulting an attorney, because it causes a lot of tax implications and other things for the kids. Once the last borrower permanently moves out of the home, so if it's a married couple, one may be in a nursing home, the other one's still living at home. That's fine, as long as one of them's still in the home as their primary residence. If you fall and break a hip and you go to rehab, your intent is to go back home. So that is still your primary residence. The loan would not come due. However, if you're permanently moving out of the home and you haven't been there for 9, 10 months, a year, and you're not going back, then the loan will come due. And at that point, you're going to want to sell the home anyway, right? If there's nobody living in the home and you're having to stay in a skilled nursing or assisted living situation, the loan would come due. The loan would come due if you default on the loan terms, which are
Property, tax.
not paying your taxes, right, and not living in the home as your primary residence. Or if the last surviving borrower passes away. Uh-huh.
So if the owner borrower passes away, could they still use their beneficiary deed?
Yes, and I recommend beneficiary deeds a lot, yeah. Unless you have multiple heirs or there might be other situations, but yes. And there's a benefit to doing it that way too. And we'll talk about, yeah, with the heirs here. So once the last borrower passes away, and we'll cover this some more, the heirs have up to a year to decide what to do. So they get 6 months, and then they can contact the servicer, say, hey, it hasn't sold, we haven't decided, and they'll get 2 90-day extensions. So the maturity event happens, again, there's no monthly payments, the loan is not due or payable as long as they're living in the home and paying their taxes and insurance. The only maturity event at that point in time is if you decide to sell the home. We talked about the non-recourse factor. So again, we're going to cover a little chart here that'll cover that in a little more detail. So these are options for the heirs. So when something happens, there's 2 big questions. Do the heirs really want the home? Yes or no? And is there equity left or not? Yes or no? So in my mom's case, we sold the property if my mom had passed. I did not want the home. There was equity. So as the heir, I can sell the home and walk away with the profits. And most of the time, that's what we see, especially with the home values the way they've been up pretty consistently over the last number of years. So if there's equity, they don't want the home, they hire a realtor, they sell the home, pay off the reverse mortgage, and walk away with it, just like they would if you had a traditional mortgage on there. Let's go this way. If they don't want the home and there's no equity left, so as I mentioned with my mom, after 30 years could there have sell in the down market, they can literally clean out the house and walk away if that's what they want to do. They can still,
Nobody's liable.
Right. They can literally they can still hire a realtor if they want, or they can turn it over to the bank to do it, whatever they prefer. If they do want the house and there's equity, all they have to do is refinance the balance or come up with it to pay off the loan. So I had one of my past clients pass away a couple years ago. The son, there was a beneficiary deed done. When the father passed, the son now owns the home legally through the county, and he wanted the home. So we were able to do, he's not 62, we were able to do a no cash out refinance, which is sometimes easier to do than like a purchase transaction for a borrower. A no cash out refinance, paid off the reverse mortgage, he now lives in the home and owns it. He has payments, but he has the home still. So as long as they pay off the loan. So if they do want to keep the home, but there's no equity left, they still have an option. So they can purchase the home for 95% of whatever that current value is. So that could be a really good deal if they want the home. They have to come up with the money, but let's say the home's now only worth $400,000. They owe $500,000. They can buy the home for 95% of that $400,000 value. And it's a guaranteed short sale. So as long as they're the beneficiary or the heir, they can show they're the heir. It has to be a family member. It can't be somebody from the outside coming in and saying, oh yeah, I want to take advantage of that. So, but if they want it, they can. So if it's a down market and somebody wants it for an investment or something and they can come up with the money, it's a really good deal. They're not having to come up with $500,000 on a $400,000 home. They're only coming in with $480. So
the 400,000 is the appraised value,
the current value of whatever it is, yeah.
and then that's in a negative equity position.
Mm-hmm.
And then the heirs, not anybody, but
Right.
the heirs have an option to purchase it for 95% of the appraised.
Of the $400,000, if that's what it appraises for.
Whatever the deficiency amount
Mm-hmm.
to pay off the loan balance will be written off as a short sale.
Right, FHA covers that. Yep. Questions there?
I think that chart is very good.
Mm-hmm.
Because everybody gets confused about what if type of scenario.
Right.
But this chart is very helpful for
Yeah.
average person to understand.
Yeah, I think so. Yeah, because I think that's a big question. People, they go to presentations or whatever, like, oh yeah, this is cool, but then, well, what happens to the heirs when it comes down to it, is what they ultimately would like to know. And sometimes the heirs want to know. And like I said, I think it's important for the family to be involved. Sometimes though I'll have somebody that's like, my kids don't need to know what I'm doing. And it's like, okay. But yeah, I think the more the kids are involved and to know what's going on, the better. Just and again, if nothing else, for the end. So I had another client, which I was shocked. I heard from her daughter about 7 months ago. Joanne was in really good health when I did her loan a couple years ago. She had passed away. And the daughter, thank God, she knew she had a reverse mortgage and she had my card. So she called me to kind of help walk her through the process. So.
I had a friend, you know her, Debbie Everland. She wrote a letter to the family of what they were supposed to do so that it was actually in all the will stuff.
Oh.
So here's the
Yeah.
steps of
Yep.
how you're supposed to do
Yep.
when I pass
Yep.
with this mortgage.
Yeah, yeah.
And before you finish, Brian has something to, or when you
Uh-huh.
finish, Brian
Okay.
has an announcement for an event after this.
Oh, okay.
that people might be interested
Okay,
in.
okay.
Brian, you want to tell them?
You want to go ahead?
Oh, yeah, we have folks coming in from Denver Urban Gardens.
Oh,
They're
that's
going
right.
to talk about how to be able to continue gardening as mobility declines.
Oh, that's today.
Mhm.
11:30,
Right after this.
keep a snack and stay.
Yeah.
Things to do. Yeah. Thanks, Brian. Okay.
So let's see, where was I? So again, this talks about why Fairway, but I like to mention, so, I'm here to help in any way. This isn't a sales presentation. Again, it's just to get your interest or for you to say, how would that work for me? Because everybody's situation's different. But what I'd like to say is, if you're gonna talk to a reverse mortgage person, make sure it's somebody locally. Don't call the Tom Selleck number. You're not gonna get Tom Selleck coming to your house. Don't call it, because those are just call centers. It's not somebody local. Work with somebody local and work with somebody that specializes in reverse mortgages. Unfortunately, over the last couple of years, because of the way the market's been, there's a lot of mortgage people who kind of started doing reverse mortgages here and there. So they'll say, oh yeah, I can do reverse mortgages too. And I'm not saying they're not good at what they do, but it's not what they specialize in. So work with somebody who specializes in it and has been doing a number of them for a long time. So there's my contact information. 2 other kind of quick things. So in the back there's some cards and there's this. We do a workshop the second Saturday of every month. You can join in person at our office in Old Town Arvada, or you can join via Zoom. And so it's a lot of the presentation I went through. It goes a little deeper. It lasts about an hour or so, and then we do questions. So usually 11:15, 11:30 we get done. But you can join via Zoom. So if you'd like to see this again, or maybe your kids or family would like to kind of hear what it's all about, just reach out, send me an email, or give me a call, and I'll email you the Zoom information. So it's a good way to just get some information.
You still have to attend a seminar to qualify.
But yeah, so part of the process once you, there is a counseling requirement. And that's been around for a number of years. So if you decide, gee, I think this might be the right thing for me, before we can move forward with a true application, you have to go to counseling to a third-party HUD counselor. So we provide a list of those counselors. And I explain to people, counseling's for 3 things. First of all, to make sure you understand how it works, right? It's different. I don't think it's complicated, but it's different. So to make sure you understand your balance is going to go up, you got to pay your taxes and insurance, you got to live in the home. So they want to make sure you understand it. 2, they want to make sure somebody's not promising you or telling you something that's not true to convince you to do this. And 3, to make sure you're of sound mind the best they can in a 45-minute phone conversation. So I always get chuckles out of that because people say, well, I don't know about that one.
My favor that way.
Yeah. So yes, so you are required to do the counseling. It can be anywhere from free to about $175. Typically, with me, that's the only out-of-pocket expense. I tell people call around because they get grant money. So sometimes you might call today and somebody's free because they have grant money, and 2 weeks they've run out of grant money, so they charge. So, but yes, the counseling is required.
How do fees compare? When you make application and you start the process, fees for, appraisal or, getting comps prepared or whatever might, need to be done. Are there fees for those types of?
So there are closing costs and fees that are typical to any mortgage transaction. So appraisal, title company fees, credit report fees, recording the deeds, those types of things. And those are rolled into the loan. They're usually like the first advance on the loan, depending on if it's a purchase or if you're staying in your home. And so those are pretty normal to any mortgage transaction. The big difference is the upfront mortgage insurance premium on a reverse mortgage. So with the FHA, there is a upfront mortgage insurance premium. And people say, well, whoa, wait, why do I need a mortgage insurance? Mortgage insurance on a traditional loan is for people who don't have a lot of equity, and it insures the lender if the loan goes into default. This mortgage insurance you pay up front, and it's your insurance that you can never owe more than the home is worth. Your insurance that line of credit is guaranteed to be there and guaranteed to grow over time. And 3, that you can never get kicked out of the home as long as you're paying your taxes and insurance, no matter what happens to home values. So it is it's an additional fee compared to a traditional mortgage. And again, all those are rolled into the loan itself. When you work with me, the only fee that I charge up front, or that's charged up front, is that counseling. I know there's some mortgage companies that will charge for the appraisal up front too. But I don't charge for those up front. You pay when the loan closes. So, but there's really no other costs out of pocket. Any other questions? Comments? Yeah.
I want to give a big shout out to you because being a realtor, and then I come across the situation that reverse mortgage may be a great option to solve certain challenges or problems. But oftentimes the reaction is, if the realtor brings up, they always say, no, I'm not interested, you know, I got money, or I don't want to do it.
Yeah.
And having a local person I can just introduce to, so they can directly learn from Renatta, has been such a valuable resource. And I have attended reverse mortgage classes for many, many times, but still it's not very intuitive for average person, you know. So I think everybody should take advantage of, you know, meeting her today, and then keep the contact information, and then she's very resourceful, and then, you know, answer your questions even if there's no like a transaction right away. One unique situation that I thought reverse mortgage would be helpful, and then really wanted them to connect with Renatta, but unfortunately I couldn't get their ears, which is it's an elderly gentleman, and his wife passed away, and they had a lovely home, but there was his brother and his wife living in the same house, and then three of them are living there, and that gentleman wanted to stay in the house, and the house with a huge equity. However, when the wife passed away, it was her brother and then his spouse, and then they were entitled, they inherited a part of the equity of the house. So they wanted the house sold, because that's how they tap into the equity to get their share. And they really they were forcing him to sell the house, but he's like, well, where am I going to go? I want to stay here.
Right.
So I tried my best to connect him to Renatta, and I had a lengthy conversation with her how it could help, but unfortunately it didn't work out. But it's a little unconventional, but being able to tap into the equity of the home. If he did the reverse mortgage on the existing home, he could liquidate the equity and pay off his brother-in-law, and then he could stay in his home. So it's a powerful tool.
Yeah, and a similar situation in divorces too, unfortunately. But I had a client who divorced, and the wife, you know, he had to pay off the wife, and he could have taken money out. He had some money put aside, but it would have taken all of his cash. Basically, he would have had nothing left. So we did the reverse mortgage, and we were able to pay her portion, and he doesn't have to make payments on it. So it can be a great solution for divorce situations, unfortunately. Yeah. Any other questions or comments? All right, well, thanks for coming. And again, there's some flyers over there if you want to, or just reach out to me if you want to get the Zoom information for our second Saturday, because as Sherry said, it's helpful to kind of hear it again, either way. So.
I heard many times, and I still hear different things.
And yeah, I mean, even if you just want to run through what would my situation look like, there's no obligation. I'm not here to, sell you or anything, just to, because again, everybody's situation is different, what they're trying to accomplish. So
Yeah, I'm dealing with a trust.
that's fine. Yeah, you can have a trust.
That's what yeah,
Yep.
it's my father.
Oh,
Yeah, and he lives out of state.
okay.
Yeah.
Okay. That's probably still doable, but yeah, or I could help
We'll
maybe.
talk.
Yeah. All right. Well, thanks. And then who's our presenter next month?
Sit and fit. I think.
Oh, yeah, sit and fit. Yeah.
Sit and fit. So
Yeah.
next month, the topic is like in-home exercise,
Mhm.
keeping your physical health.
Oh, that's a good one.
Yeah. Yeah, it should be good. She's very interactive, so yeah. Well, thank you.
Thank you.